It's time for another Southern California housing market update. We are going to run through the numbers just before we get into the busy spring buying selling season. And this video was incredibly difficult for me to shoot. I've been doing these updates every 2 weeks since the beginning of COVID. And this one was completely different, and I'll explain why. Hey there, Christian Walsh, real estate agent with Wire Associates. We have been helping buyers and sellers make the best data-driven decisions since the beginning of these crazy days. So I'll tell you a quick story about why this one was so tough. I literally ran through about 25 or 30 takes, shooting different data and running through the numbers in different ways. And ultimately, this one was so tough to shoot because the numbers are so normal. And you'll see what I mean by that. At the beginning of COVID, the numbers first started out crazy low as the market essentially crashed, then immediately took off and continued to go along at crazy levels until we hit 2022 around March. And then interest rates started to go up and everything slowed down. Long story short, every market update I've given since the beginning of COVID has some sort of extreme numbers. There's really nothing extreme in these numbers. They look incredibly normal. And that's not a bad thing, but it's just a different thing as the market moves to something that looks incredibly normal. Of course, like we've been doing, part 2 will have more data that shows that pending sales and closed sales are down. Plus, we'll run through median home prices, and there may be some amazing, huge changes in there. But other than that, it's kind of boring. So I don't blame you if you click on into something else, but I'd like to see you stick around. So if you're ready to dive into the Market Action Index, inventory, days on market numbers for LA, Orange County, San Diego, Riverside, San Bernardino, and Ventura counties, hit that like button and let's get started. Of course, one of the first things we're going to talk about is interest rates. Even though the Fed fund rate was just increased by 0.25, which was the smallest increase we've had in a while, we did see that interest rates have gone down, and this reflects the drop in interest rates after the Fed fund increase. And we can see that rates are down to 6.09, which is the lowest it's been since the third quarter of 2022. So we haven't seen rates this low all of fourth quarter, but finally we're getting to lower rates. Now up here you'll see the 1 year change is still 2.5%. So we're 2.5% higher than we were a year ago, but things are headed in the right direction, and this should in turn be good timing for the start of the spring buying selling season. Running through inventory levels, what are we not seeing? We're not seeing a huge uptick. In fact, inventory is down. We're not even at 2020 levels in Southern California. This is the California data you're looking at, but the county data matches. In the state of California, our inventory is down. You can see that we're down in Orange County. We're off 1,300 homes compared to 2020, and inventory was down then. You look at years past, we're at half of where we were starting out 2019, a more normal year. LA is an important one to take a look at with inventory because we may start to see more thanks to the end of the eviction moratoria that are going on. But you could see there was a big drop between 2019 into 2020 for inventory. That stayed down until the interest rate hikes of 2022 and dropped significantly. So here we are, yet another county where right now we are below 2020 levels for inventory and well below normal years of inventory. All the counties in Southern California are consistent. Days on market, another important statistic that we often cover and you have asked to see more of. And here we are to give you a flavor of where things are right now. And it looks incredibly normal is what it looks like. So you can see that for the state of California right now, we're at 77 days on market. Now, last year, things were moving much faster, about half, 35 days. And the year before, another crazy year, things were moving quickly at 49. But you go back to normal years. You go back to 2020, 77 days. You go back to 2019, 77 days. 70 days. Things were moving a little faster in 2018. back up 77 days, 2017, 2016, 63 days. So things moved faster in 2016 than now. So what we're seeing is it's pretty normal. Now we know that inventory's down, we know demand's down, but those numbers come together and collide with each other in days on market, and we can see we don't have days on market going through the roof, running through the counties, because we know there are differences right now and what we're seeing in the data. So Orange County, it was at 70, and in 2020 was at 84, so it was much slower. So we're actually moving faster than we were in years past currently in Orange County. Los Angeles, not too far off, 77 days. Go back to 2020, 77 days. So very similar pattern where we're seeing that things are moving at normal paces as compared to years past. In Riverside, similar story where it is just a whole lot like 2020 and before. San Bernardino is a little bit of an exception. We're seeing 84 days on market right now. And if we go back to the 2020, it's 77, 77. So things are taking a little bit longer in San Bernardino to sell right now. Not outrageously longer, but definitely taking a little bit longer. We'll have to keep watching what happens to this number. Ventura, you're always all over the place, but you look pretty normal. So 77, it took 91 days back in 2019. So actually things are moving faster than they did then. San Diego, another market very similar, 70, 77, 77. So actually moving faster than it was in more normal years. And don't forget that we're real estate agents based in Southern California, and nothing would make us feel better than helping you buy or sell. There's a link below so you can reach out. Now let's run through another important metric from Altos Research, and that's the Market Action Index. And what it does is it compares the level of inventory against the rate of sales. So it's showing us whether it's a buyer's or seller's market. You can see in their handy graph, if it's 30 or less, the number, then it's a buyer's market. 30 or more, it's a seller's market. And you will find that we are in a seller's market in all the market centers. So how does this compare going back to the start of the year, which was normal? We're at 43. Remember, the higher the number, the more of a seller's market. So 43, it went up through that season, then COVID hit. And then after COVID, that's when the market got nuts. And then it dropped as the rates went up in 2022. But right here, we're at a 42.16. Back here, we were at a 43.05. These markets are almost identical. For the state of California, the start of this year is almost identical to the start of 2020 based on the Market Action Index. The level of inventory has stayed low. At the same time, demand is down, and it's leading to a similar market. So if you started shopping for a home in January of 2020, it's going to look very similar to shopping for a home right now as far as competition. Of course, different interest rates and prices and a whole lot more, but very similar markets. Take a quick run through the counties. Orange County, it is a strong seller's market, so better than the state data. And you can see that it was a 42 in the beginning of 2020, and now we're at a 45 almost. So it's actually more of a seller's market than it was 2 years ago. And look at the difference in the graph as compared to the one we just saw. Look at what happened when rates increased, that dramatic slide. And we saw that happen. Los Angeles, a slight seller's advantage according to the Market Action Index. And look at the chart. Let's compare. So going back to 2020, 43.48. Now it's down to 41.17. So it is a little lower than it was at the beginning of 2020. Also has that huge slide like we saw in Orange County. Now, the one interesting thing in LA is the eviction moratoria are going to be coming to an end. We've done content on that, and that could quickly change the level of inventory after notices to terminate tenancy are given and residents start to move out and landlords put those on the market. So watch for a shift in inventory levels from landlords looking to get out of Los Angeles. Riverside, another one that's a slight seller's advantage, and we can see that it's actually a little more advantageous for sellers now than it was 2 years ago at the start of 2020. So let's see what happens to this curve as we get into the spring buying selling season. Noticing a pattern, even our buddy Ventura with numbers that are crazy, they are at a slight seller's advantage. And you can see, let's see how they compare, 39.72 over 40. So more of a seller's advantage in Ventura by a tiny bit. at the start of this year. San Diego's another one with a slight seller's advantage right now, and it's still better than it was at the start 2 years ago. So another place where it's still a seller's market. We're not seeing evidence of the massive housing crash as we start out the year here. Of course, you're going to want to tune in and track and make sure you sign up for these reports for both the county level, which you can, and also your local city and zip level. And that city and zip can be anywhere in the United States, so go ahead and add that in. And one more thing I wanted to show you with the Market Action Index for back in Orange County, you can actually split it up into quartiles. So each of these lines represents a quarter of the market, and it's broken down into top, upper, lower, bottom. And what I want to show you is how the market can be very different. The bottom, the red line, hit that 100% level several times during the crazy days we've had. Lower, it did as well. Upper didn't quite, but you can see just as interest rates started to go up, that's just around the time that this was at its peak and then started to drop from a seller standpoint. The top of the market has been remarkably consistent, not quite as dramatic as the other swings that we see based on price point, but just another way to look at the market. And depending on where you fall in price points, it's going to give you an idea of how quickly things are going to move. So if you're in the bottom 25%, so that would be 775 and under based on these quartiles, assuming you're priced right, you are going to move quickly. You're at a 52, which is a high level of a seller's market. So another way to use the data, make sure you sign up. Thanks for sticking around to the end. I appreciate you sitting through these unexciting numbers. Let me know in the comments below if you saw anything exciting. If there's any numbers in there that look interesting, whether they're positive or negative, let us know in the comments below. Of course, you want to get these market updates, landlord-tenant updates, and a whole lot more delivered to your email inbox, and we'll do that if you sign up for our free email newsletter. We have a link below. And check out this next video so you don't miss more on the housing market 2023. Thanks for tuning in. This has been Christian Walsh, real estate agent with Wire Associates, and we want to hear from you.